Imagine you're at your kitchen table, a pile of bills staring you down, your stomach in knots, wondering how you'll make it to next month. Or maybe you're a young dreamer, scrolling through social media, watching others live lives you crave, and asking, how do I even start? Perhaps you're a doctor, lawyer, or entrepreneur, grinding endless hours, pouring your heart into your work, yet your bank account feels like it's mocking you. I've been there, trapped by money, wondering if financial freedom was just a fairy tale for someone else. But what if I told you there's a teeny habit, just 1% of your income paired with 4 simple ETFs that could change everything? Over the next 20 minutes, I'll show you how this 1% habit, combined with 4 no-brainer ETFs, can quietly build wealth, whether you're drowning in debt or dreaming of millions. This is for parents, young investors, professionals, and entrepreneurs, anyone ready to take control. No complicated jargon, no overwhelming strategies, just a clear, simple path to financial freedom. Let's dive in and rewrite your money story. Let's start with a hard truth. Money doesn't buy happiness, but it buys options. Options to stop saying no to your kids' dreams, to take that family vacation without guilt, or to build a legacy that outlives you. She worked as a nurse, juggling night shifts and school runs, feeling like she was drowning in a sea of bills. ETFs, or exchange-traded funds, are like baskets of stocks or bonds you can buy as a single investment. If you're a young investor, say 22, earning $40,000 a year, your 1% is $400 annually, or about $33 a month. Split that evenly across these 4 ETFs, and with an average 7% annual return, that $33 could grow to over $80,000 by age 62, diversified and built for steady growth. If you're a freelancer or entrepreneur with inconsistent earnings, use your average over the last 6 months. Step 2, calculate 1%. If you earn $5,000 a month, that's $50. If it's $2,000, it's $20. Step 3, open a brokerage account with a platform like Vanguard. Parents, you not just saving for yourself, you saving for the day your kids can chase their dreams without debt. Young investors, you're building a future where you can take risks, travel, or start a business without fear. Professionals and entrepreneurs, you're creating a safety net so you can focus on what you love, not just what pays the bills. If you're in debt, start with a savings account. This 1% habit and these 4 ETFs are about rewriting your story from stress and scarcity to possibility and power. It's about looking at your family, your business, or your dreams, and knowing you're building something real. As the poet Maya Angelou once said, you may not control all the events that happen to you, but you can decide not to be reduced by them. Your 1% is your decision to rise above, to build a future that reflects your worth. Fidelity, or a robo-advisor, like Betterment or Wealth. And most importantly, start your 1% habit today. Take 15 minutes today, right now. If you can't calculate your 1%, open a brokerage account and set up that automatic transfer into V. If you're ready to invest, pick these. Check your balance every few months and celebrate the progress, no matter how small. If you're unsure, talk to a friend or search beginner investing online. The point is to take one small step. You're not alone, I'm rooting for you. And so are millions of others starting small and dreaming big. Subscribe to this channel for more practical, life-changing strategies like this one. Share this video with someone who needs a spark of hope, because you deserve a future where money isn't awaited as a tool to build the life you've always wanted. Let's do this, 1% at a time. Step 4, set up an automatic monthly transfer of your 1% into these 4 VZSBND and BNQ. Split it evenly, or if you're younger, lean heavier on VTI. Step 5, don't touch it, let it grow. If you're in debt, start with a high-yield savings account to build a $1,000 emergency fund, then shift to these ETFs. If you're nervous about investing, know this. These ETFs are like the reliable workhorse of the market, steady, diversified, and proven. The S&P 500, which VTI tracks, has averaged 7 to 10% returns over decades. You're not gambling, you're building, but dropping into a bucket every day. And over time, that bucket overflows. That's what compound interest does. It turns tiny actions into massive results. That first $100 in your account feels like a spark. That first $1,000 feels like a wildfire. You might negotiate a better rate on your loans, cancel a subscription you don't need, or take a free online course about investing. Imagine you're a parent, and every 1% you invest is a drop in a bucket that ensures your kids go to college debt-free. Or you're an entrepreneur, and those drops create a reservoir of security, letting you take bold risks without fear. Or you're young, and each drop builds a future where you retire early or travel the world. This isn't just about money, it's about hope. It's about believing your dreams are within reach, even if you're starting from zero. As the legendary investor Warren Buffett said, someone is sitting in the shade today because someone planted a tree a long time ago. Your 1% is that tree. And these 4 ETFs are the sunlight and water it needs to grow. Think of them as fertile soil where your 1% seed can grow into a mighty tree. Here's the lineup. For parents in debt, saving 1% says, I'm not defined by my struggles. For young investors, it's a low-risk way to learn the market without fear of losing everything. For professionals and entrepreneurs, it's a reminder that your hard work should build wealth, not just pay bills. Once you start, it's addictive. You start seeing yourself as a wealth builder, not just a spender. That shift changes everything. The 1% habit, paired with these ETFs, is your gateway to a new mindset where you're in control. First, VTI, giving you a piece of thousands of companies like Apple, Microsoft, and Amazon. It's averaged about 8% annual returns over decades. Second, VXUS, this spreads your money across global markets, reducing risk if the US market dips. Third, BND, a safer choice that invests in bonds, balancing your portfolio and cushioning against stock market volatility. And fourth, VNQ. This invests in real estate, like malls and office buildings, adding diversity and steady dividends. These 4 ETFs are like a perfectly balanced meal: stocks, bonds, real estate, and global exposure, all with low fees. You don't need to be a finance expert, you just need to start investing your 1% in them. Every month was the same: pay for groceries, cover the rent, and pray the car didn't break down. Saving. It felt like a cruel joke. But one day, Sarah heard about the 1% habit. Freedom from the stress of bills, the fear of running out, the weight of feeling stuck. She did the math. Her monthly income was $5,000. So 1% was $50. She laughed, thinking, what's $50 going to do? That's not even a week's groceries. But she decided to try it. She opened a brokerage account and set up an automatic transfer of $50 a month into 4 ETFs. But after a year, her $50 a month became $600. Plus a little growth from the market. That small win shifted something in her. For the first time, she felt in control. 5 years later, her 1% habit grew to $3,500. And the confidence it sparked helped her pay off $12,000 of her debt. She negotiated lower interest rates, cut small expenses, and kept investing. Sarah's not a millionaire yet, but she's on her way. All because she started with 1%. And for simply, if you're a parent buried in debt, you're not just fighting for yourself, you're fighting for your family's future. If you're young and new to investing, you're standing at the edge of possibility. But the stock market can feel like a maze. If you're a professional, a doctor, dentist, or lawyer, you've worked hard to build a career, yet your money seems to slip away. How can 1% and 4 ETFs? Or maybe, I can't even afford 1% right now. I hear you. When I was scraping by, saving anything felt impossible. But wealth isn't built in one giant leap, it's built in tiny, consistent steps. Think of it like planting a garden. You don't need a huge plot of land, just a small corner to sow your seeds. If 1% feels too much, start with 0.5% or even $10 a month. The point is to build the habit. And if the stock market scares you, these ETFs are designed to minimize risk. They're diversified across thousands of companies and assets, so you're not betting on one stock. They're the opposite of flashy. They're reliable, like a trusted friend who always shows up. And if you're an entrepreneur, you're pouring everything into your business, wondering if you'll ever have a safety net. We all want the same thing. But here's the problem. We were never taught how to make money work for us. We were told to hustle, pay bills, and hope for a miracle. Hope is beautiful, but it's not a plan. That's where the 1% habit comes in. Let me tell you about Sarah, a single mom with $20,000 in credit card debt. So, what are these 4 ETFs? And why are they the perfect match for the 1% habit? Let's make this real for you. Think of your 1% like a single drop of water. Alone, it's small, barely noticeable. Why does this feel so powerful? It's not just about the dollars, it's about who you become. Let's get practical. How do you start today? Step 1. Figure out your monthly income. Let me share another story. Meet Jamal, a 30-year-old entrepreneur running a small catering business. Now, let's tackle the doubts. You might be thinking, this sounds too simple. Why does this matter so much? Because your life is bigger than your bank account. Here's my challenge to you. Don't let another day go by without starting.